Hello everyone, welcome to the IchimokuCharts.com daily analysis for the S&P 500 for Monday, August 12th, 2011. Well, a continuation of the trend to the downside today, and we have a candle that's made a lower high and a lower low. However, we have a green body candle, and that's in contrast to the previous two trading days where we had red body candles. This green body candle denotes the buyers making net bullish progress on the day between the open and the close. It hasn't been a terribly significant amount. It's a fairly small body to this candle, but the important thing is that the sentiment has changed. Where previously we had the sellers making net bearish progress today, that has turned around, and that could be quite significant for this market. Now, the other interesting feature of this candle is the large shadow on the bottom, and we can see here that the market tested down to this strong support area at 1133. And we've tested that region on 3 occasions. 4 occasions we've tested down below 1150, and the market has held, and that's here, 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 and today's trading. And then on these 3 previous occasions, tested down to 1133. So that's a very, very strong level of support for this market. Now, this is very similar to a hammer type pattern, although we really don't have much of a downtrend here with just a 2 candle downtrend to retrace. But the significance of the hammer pattern is the small body and the largest shadow on the bottom. The shadow on the bottom represents upside price rejection, or the sellers losing commitment as they were trading down around these levels, and we know that that's happened on a few occasions, so it could be quite important for this market. To see this market change trend, we would require a higher high and a higher low, so we would want to see the market trade above the high of today's trading, which is at 1162. But that area coincides with this previous area of potential resistance at 1163. So the market will need to be moderately bullish to trade up through there. We also have the market trading very close to the Kijun-sen, and that area will hold as potential resistance as well at 1166. Above there we have resistance at 1173 and up to around 1183. Now, in Ichimoku charts terms, we are trading down below the cloud, so the market has an overall negative bias. And if we notice what's happening with the cloud at the moment, the cloud is actually moving down very close to where the price action is. So that's significant. The market may be interacting with the bottom of the cloud fairly soon if we do see some sort of a retracement. And here we can see that we'll be even closer to the cloud, so we know that the cloud will hold as an area of support or resistance. If we do trade up near the cloud, we do have and into the cloud and then through the cloud, we do have a very flat area of the cloud, and any breakouts above or below the cloud from these flat areas, we do need to be very careful of them, because quite often they can be false breakouts. But let's not preempt ourselves. The market hasn't traded anywhere near that at the moment. The market is trading down below the Kijun-sen, which is the pink line here, but that tells us that the market is bearish in the medium-term time frame, but we're trading very close to that level, so the market is almost neutral. We are trading down below the Tenkan-sen, which is the green line here. It's partially obscured by the line of support there, and that's telling us that the market is bearish in the fast-term time frame. So a market that's technically bearish in all 3 time frames, and the Chikou span is just below the corresponding price action, confirming the bearishness. But really, a lot of these indicators are not very far away from the price action, so quite a neutral market in a few of these time frames. So obviously for tomorrow, 1133 is very important for any potential continuation of the trend to the downside, but certainly it looks likely that the market will test around 1163 and perhaps above. Next, we'll take a look at light sweet crude oil. And we can see here that the trend is continuing down to the downside, with the candle making a lower high and a lower low, although a change of sentiment in the market in terms of short-term dynamics, where we have a green body candle in contrast to the previous 2 red bodies. So that means that the buyers have made net bullish progress. We've also had this market close up towards the high, not quite at the high, but that does suggest that the buyers have taken control over this market throughout the trading day. We can see we have a longish shadow on the bottom, and the market's tested this support area at 85.11, which is held on a few previous occasions where we tested below there but failed to close below there, and that's a very important level. Below there, 84 is a very strong area of potential support for this market as well, and extending down roughly to about 83 down to this region where the market tested previously. To the upside, we do have very strong resistance at 90, and that area has held on a few occasions previously. So if we do see any potential for a change of trend, then that is an area where we could see the market hold up. We do have the market trading down below the Ichimoku cloud, so technically the market is bearish in the long-term time frame, although we are now trading fairly close to this cloud. If we do see a rally and the market trades through 90, we could see the market interacting with a very narrow part of the cloud, and there could be some potential for the market to break out to the upside, although we do need to see the market change trend and test up to those levels. The further we go over here, as the market continues over the next few days, we will see the market trading closer to the cloud and a much thicker area of the cloud. So there is a potential for that area to hold as a little bit stronger resistance. So do be aware of that there could be strong resistance coming up over the next week or two. In terms of the Kijun-sen, the pink line here, the market is trading up above the Kijun-sen, so the market has a bullish bias in the medium-term time frame, and we are also trading up above the Tenkan-sen, the green line, so the market is bullish in the fast-term time frame. Looking at the ticker span here, that is trading within the price action and giving conflicting signals, so not confirming any bullishness or bearishness in the medium term, fast term or longer term time frame. So we're getting mixed signals here, bearish in the long term time frame, but bullish in the medium term and fast term time frame. Next on to gold, and we can see that we've had a change of trend to the downside today, a candle making a lower high and a lower low, and a fairly large red-bodied candle. So some decent net bearish progress made by the sellers today between the open and the close, and they've taken out this 1814 level where we did see previous resistance and then support in this market. So a fairly bearish close down below there. The bears have closed with control, and they've shown some good strong commitment to taking this market lower. The 1800 level, however, is a region where the market has held up, and that may be very important for any potential continuation of the trend to the downside over the next trading day or so. We did see that the market tested just down below there to around 1790, so that's a minor level that we should watch if the market does trade down. In Ichimoku charts terms, the market is still trading up above the cloud, so we have an overall positive bias in the longer term time frame. The market is still bullish in the medium term time frame by trading up above the Kijun-sen, the pink line here, but we are retracing back towards there, and it is looking a little bit flat. We do have a little bit of upside momentum reflected in the medium term time frame by it pointing up, but still quite flat, so there is potential for the market to retrace back towards there. The market is trading down below the Tenkan-sen, the green line here, so we have a bearish market in the fast-term time frame, and it's been a while since we've seen a bearish market in the fast-term time frame. The last time we saw that, the market found support at the Kijun-sen, so that is what we would be expecting over the next day or two. Trading, we would expect to see 1781 potentially hold as support for this market. If we do see a bearish close down below the Kijun-sen, we could quite quickly see the market trading down to around 1740, 1723, and then potentially to the swing low at roughly about 1700. So there is potential for the market to come off significantly. Previously we mentioned this double top type pattern. These closes or the highs within the pattern here are not in exactly the same area, but they're roughly in the same area, and that is one of the criteria for a double top. This is only a potential pattern at the moment. We do have this pattern still forming. If we do see the market continue to sell off and take out these areas of support, then confirmation of the pattern would be a breakout and a close down below the intermediate swing low between the two highs, which would be roughly around the 1700 level. And if we saw the market break out down below there, we could see the market sell off substantially with a target determined by the distance between the low of the pattern and the high of the pattern. So that's from 1920 down to 1720. You could see the market sell off at least $200 and end up trading down to around 1500, although we're not likely to see that in a hurry. A few things that would potentially halt that if we did see this breakout down below this area would be some of these support and previous support and resistance areas at 1683 and 1644 or 41, but certainly the cloud as well. So we do have the market potentially meeting the cloud. The longer that we go on trading, then the cloud is coming up to meet the market. So we do have potential support getting closer and closer to where the market is trading at the moment.